I would like to cover the swing trading today, and this is a CFTC requirement. Please, you have to know that there is a risk in the trading, and there is nothing guaranteed in the trading business. Please do your homework and try to stay on sim as long as needed, and practice as long as needed before you start using live money, and that is for your own safety only. All our videos are based for educational purposes only. Today, I wanted to cover something we have been talking about, why I like, this isn't fully automated right now. And a lot of traders, they like the full automated trading. That's very fine. But this is where for the traders between trading, and this is just a normal basic chart, CL 150 ticks, which is very popular among all the traders, this number. We've had some very nice ride on the CL today, but this is where the zones, those are those lines here, the zones, and those zones here, they can sometimes, when you are coming to the target, you can see there is some projection will come in right before the zone. Let me try to find another chart where we can, okay, this is, we'll keep our eye on it. This is the gold, and we have a short on the gold, and this is where I really like to mention again on how this market almost hit the target and then bouncing back, and that you will find on every market that the market come back to the first trailing stop or first trailing the major resistance line, and then the market go back. So what I'm trying to say, if you notice here, we have a major support line at 29, and that could be done, that trick, on any type of market, whether an ES or CL or gold. And you can see we missed a little bit on the target, and then the market went back. But when we use those zones to our members, those zones, only the lines, it's not the system. Those lines, they cost $35 a month, and they are very efficient. You know, stand using thousands of dollars for fibs. You can see how the market came into major support line at that zone, bouncing back, and this is the re-entry point here at 31.6. And it doesn't matter if it's a gold or not. But when you have a trade is in your favor and you're coming to a major support line and you are missing a few ticks from the target, that trader can consider taking that trade out here. And that's why I personally like the ATM. It comes in two versions, the ATM and the full automated. But I personally like the ATM, and you could have get out of that trade, and when the market get back in those area here, we can re-enter the market with a minimum stop loss. And this is the beauty about it. It's not the 22 ticks we need, it's the minimum stop loss for swing trading. And that we could have entered the market one more time, and that will be the only trade for today. And that's what is nice about trading, that you do not to have to be all the time expose your account to a trading because of the high risk. And that is very important, to not being in a trade all the time. And as we notice right now, we have on the CL, and this is a really basic chart, 150 ticks. We can see where this entry came in from, 52.95. That's very fine. And then the automated trading is trailing to those price level. And then also, you can use those, especially our members have the zone. It's very important when you are in a trade. And when you see a major support line become a resistance line and you are in a trade, and here is the puzzle could be two traders taking the same trade and the same entry, but it's not necessarily come out with the same results. Because if you notice here on, now we have a resistance line at 52.75, and we are trying to get at 52.65. Sometimes in this business, being aggressive, it doesn't pay off, and being impatient doesn't pay off. So for the technical point of view, if the 52.75 become a resistance, and if the CL is struggling right now, is another 15-20 minutes, the market is closing for today. Oh, we forgot to put the clock. Today is 12/22/2016, and we still have 20 minutes for the market to close. This is a very nice area, but when you are in a trade, if this market pulling back, then we can keep our eye, as an example, not just on a CL, on an ES, on a CL, on an any type of market, NASDAQ, Dow Jones. Then we can, if this market pull back and this resistance holding, that means there is a potential we're gonna be hitting that target to the 52.65, because what we are doing, we are really protecting ourselves anything above 52.75. But if this market come in and penetrate those line, maybe we need to consider to close that position, and that is going to make a big difference in the trade. The reason is it's very important. Most of the traders make the same mistake, that they see 10 ticks, 12 ticks, and then they get out of that trade. Fair enough, because they are desperately needs to put money back in the account. But sometimes, look, where is this projection right now, a plot? You see that projection? Now, this is the zone where it's monitoring your chart all the time, and now we have a projection at 52.65, and let's watch it. Where is our target? 52.63, and now is about closing time. Do we have to stay on that trade to get those 2 ticks more, or should we go ahead and push the number and 1 tick above that price? Look, this is now life. Look how this market is struggling on those numbers, and now we are dancing between 2 ticks. Okay, look at this. So look at that. So the market is sitting right now, either you're going to be getting out at 61, and we know there is a projection right there. And that it's going to make a difference, especially for those guys are between auto trade, and they have a little, look at this. So should in those cases here, for the guy, the one is using fully automated and he's away from his office or he's busy, he missed out on a good trade because he doesn't want to mess with this market. Where another guy, he don't mind to get his involvement in here. And now you can calculate it. Maybe I will go ahead and cut off that trade somewhere around that area, plus minus 1 tick. And if we notice right now, before this targets come in, there is another support line come in at 52.61. This is not hard even for a beginner to use those zones, those lines here. Those are $35 a month. Only the lines, nothing else, because we have some people asking, does it comes with an auto trade? No, does not comes with an auto trade. It's only lines. And let's look at this one here. We have a support line right now. We have a projection at 52.65, and we have another support line at 52.61, and look where is our target is 52.60. And let's watch this one here. So we can identify that target here. We are maybe gonna be missing that trade by 1 tick or 2 ticks. And why messing up a good trade? So when you are using an automated trade and not looking at this auto trade, your results are gonna be totally different than the guy next to you getting his hands on the chart and using his common sense. The reason is the guy is on a fully automated, maybe is gonna be closing somewhere around that area. If there is a pullback right now, he's gonna be knocked out of those trades at 52.77 and 52.73. One guy is using his hands with this charts with the auto trade. He can nail 620 maybe as an example, and another guy can walk away with $280, and they are using the same entry, the same chart, and the same auto trade, except one is using fully automated, one is using ATM. If we are looking at those lines in general, we can see beyond your imagination how those zones work and how perfect they are. We have some traders, they've been using them now. Look at this. Let's watch. I don't want to distract you from this one, but this is a CL, and look how we are fighting for that target based on 1 tick. Look at this. And that's why we've been screaming for the last 6 years. We've been screaming that we don't need you to learn alpha waves and sit in a room and learn price action, because they fell. All those trading rooms, they fell. But at least have a little common sense and interaction with your trading, and try to understand what's going on in the trading, and try to understand that market, how it works. And this is one of the example. That's when you start. Look, it's exactly to the support line, 52.61, and look at this. We call accuracy, where we have some traders before they used tens of thousands of dollars for those lines, and we are providing those for $35 a month. And now, do I have to stay on that trade for one lousy tick, or should I close that trade? Another thing is, if you close that trade and on the support line somewhere here right before your target, you can always re-enter the market in those lines here. Where is your first minor resistance, and where is your major resistance? Because when you say to somebody, and then you can put a plot 1 sale short if you want to on those area here. And this is really, really important, folks, to try not to just use any auto trade, whether it's a Best Pro trade or any other system. If you're not gonna get involved with your auto trade, try to understand the limitation, and quit looking at numbers and start looking at the bars movement, trying to understand how that auto trade taking a trade, how this auto trade limitation, and when is this auto trade can make money. The things is, with an auto trading, there we go, we're done on that one. With the auto trade, if a human cannot get involved with the auto trade and be relying and closing his eyes and not looking at this market, any kind of auto trade, like on the A scalper, B scalper, and C scalper last year, we've had maybe 10 updates, and the year before around 8 updates, and the year before 16 updates. And there is no way that, and we keep maintaining those ABC scalper because there is no optimization required for, because we give up on that idea, and we find out a lot of traders cannot optimize. So, but constantly we are updating the auto trade to be adjusted to the market. If you don't do that and you just glue in couple indicators to an auto trade, that auto trade, if you're not gonna keep maintain it, and the problem is not to just maintain it, the maintenance on it is not to just maintenance, normal maintenance, but on any auto trade, especially if you are scalping the market on an auto trade, that the 200 days moving average on the ES once across, and even if you spend 2 months on an optimization, once the ES cross the 10 days or the 50 days or the 200 days moving average, that market has changed. So maybe you did the optimization on 50, and now we are on it was below the 50 days moving average, and now the auto trade, the ES is on above 200 days moving average. So you're all the time, and a lot of traders, they don't understand that that if you just put the auto trade and close your eye, and that's why on the A and a B and a C scalper, constantly we are working on it and trying to monitor the auto trade, because you cannot just keep it as is. The problem with an auto trade is how to maintain it and keep it updated to the market. Anybody can put two indicators together and call it auto trade, but how you maintain it and how to adjust it to the market, this is a nightmare, and that it requires a lot of work. If we are looking right now as another example here on the NASDAQ, this is another common chart. It's a 200, it's a 150, apologize. It's a 150, and this is where we have something on the NT8 that called the true average price. Because this one here is designed, it's not just for auto trading, but for guys they are like to trade and also get involved in the trading. Because what I have found out the last 6 years working in the public, that combining an algorithm with a human is the most success, where you can being just not experienced enough in the market, and it doesn't matter what auto trade you buy, you're gonna fail. You have to put little work here, and we're not talking about spending a year in a room or trying to learn, but you have to find common sense in the trading, and nobody can help you with that except yourself. Try to build your own trading style and try to understand what's going on, and try to be specialized with 2 different markets only. Look at those zones on the NASDAQ. This one here is a reversal where we have a major resistance line, and this one here is 150 ticks, and the chart speaks itself. Then the markets come into one of the major support, then come into the next level, and there we go. Look, here's your breakout. We have another system is estimating, always constantly estimating where is the next target. The next target estimating for those, this is a separately, it's not has to do with any auto trade. This one do an estimation for you where probability this market is going to be rejecting. And it was 49.26. That's very fine. The market stopped right there, pull down, pull back right to the support line, resistance line. Then the other estimation, next estimation, which is totally works on a different algorithm than the buy and the sell and all this. The next estimation was 49.21, and look at this. It came in exactly to the major double support line, double major double support line. That means indication to enter the market. And this is one of the simplest way to enter the market, whether you are a professional or you've been 10 years trading or 20 years. Don't get lost in the trading and try to keep it simple in the trading. I don't know on those numbers here if this market is gonna hold or not, as an example. But you can see the accuracy where the market came into directly to the resistance line, pulling back, confirming support line. Most of the traders, they try to take the first step on the breakout. You should never do that. What we have to do, and this one I've been using that, those are my favorite, and I've been doing this since 1988. On the first breakout, I don't know what is the outcome on the first breakout, and no trader on this earth knows what's going on. It could be because back and forth and break and all kind of stuff can come into this. So on the first breakout, let it be. You're not going to miss anything. But then when the market come back and confirm this area here, then we can understand we have a very nice an entry. And from one entry to another, one of them, they're going to be making a lot of ticks. And some of them, they are very small trade. It's like when you are fishing in the water. Another alternative, what we like it is such an enjoyable to trade the swing trading. We have developed something called the true average price. But this true average price is not like anything you download from any forum. This true average price, it is, you can see, it is really giving you the turning point in that market, whether you need to think short or long. And that is, I'm gonna be showing a lot on that. This is one of those nice entry. If this market come back and break out those area here, and the same strategy, if this market break out from that area, pull back on the same re-entry, this mean you need to put full gas in there. And once we break out that one here and confirm this 49.35 is holding, those where you can pick up a cheap trades on swing trading, don't have to be 20, 30, 50, 80. The patience in the trading is more important that the money you have in your account. Your money in the account is irrelevant if you're not patient and disciplined. No matter what kind of tools you will be using, you will wind up costing everyone and blaming everyone, and the only one you need to blame is yourself. This is another things here. The market is going back to retest that one. And right now, this is where the area, if you notice, we have a resistance line at 49.35 with a very true average price at 49.35. What is the odd to take that trade? Not much. And this is where you can nail it, because now the market broke down, pull them back, confirm that resistance line, and this is to go on a short. If this market fell those area here, and then it is very important. This is another one right now, and look at it and watch the NASDAQ. Look how this market right now hold exactly on that number, 49.35.75, and it's stopping. There we go, folks. There we go. This is your entry. This is your entry, folks. There we go. Here we go. The things is, a lot of people that want to analyze what happened in the past. I don't care. I want to analyze where this bar going. And you can see how this market respected this area here. Another things, your target is 49.40. When you are on using the ATM, you can take it a little bit down from the target, and then you say, okay, I'm not gonna get the 49.40. I'll take the 49.39. And you can see how this market respecting this area. And this is NASDAQ. Folks, that's all what we have for education today. God bless you all. And if I don't talk to you guys, wish you happy family Christmas, and health and happiness for the Christmas is number one. God bless you all.